Hello again, people. Right, I wasn't going to make this video. It's way past my breakfast time, and I haven't had a coffee yet. But if I don't make it now, I'll probably forget. So, and it's very important because I've posted a tweet. It is important that we make use of the volatility of the market opens. Well, everyone knows that that's been trading for a while, like the Frankfurt and London opens, also USA, also the uh, the stock market open of USA at about 2:30 UK time. Clocks changed now, so we're back in sync. So what I mean by this is the half past the hour and three quarters past the hour, so the 15 minute before the H1 close, as it were, are um, times of day that I look at closely. So that'd be 7:30 in the morning, 7:45, or 8:30 in the morning, 8:45. Because if those 30-minute and 15-minute candles agree, then it's highly likely, in my opinion, and in historical sort of statistics, that if the 5 minute also agrees, so I'm talking about the three candle reversals, I'm talking about the RSI histo momentum still going up. In other words, it's changed from a green to a higher green, or red to new green, above the 20 and so on, then it's highly likely that it might continue. And the 5 minute will confirm that, and if you want to, the 1 minute will confirm the 5 minute is correct as well. And Bob's your uncle. Now, the one caveat I need to put in here that you might not take on board because of these two suggestions here is that it doesn't necessarily have to work outside of hours, outside of those volatile times, because you have to make sure you are going with the flow of the big boys in the market. Outside of the big boys market, you will probably playing with algos, and they will kick you all over the place. The other thing to mention while I do here, while I think of it, is news. Always be aware what the news is doing. And news, an anticipated news may well change. Suppose you've got news at 9 o'clock and you're considering entering a trade at quarter to 9. It may well affect things. So always have one eye on the news. Rest of all that stuff, I try not to think about at all. All I want to do is look at charts. That's important. So, what do I mean by that? Well, apart from the fact we've got a lovely 2B reversal here, a pump, a dump, and then a pump up, which is what a 2B reversal is. It's clearer, the divergence on the 15 minute. We can look at every time frame and we can see, and this is what I mean. Look, we've gone from red to green, and now we're in the new hour. So prior to this, all I could see was that change from green, and then we're still green on our current hour. This is the new hour now, the one before that, after that trade. This wasn't printing at all, but this was printing green. That's important. Then M30, because it's 9 o'clock now, so we're talking about 8:45, 8:30, 8:45. M30, clearly similar thing going on. Not huge momentum to the downside. In other words, that divergence is creeping in. Clear M30 changes of momentum growing all the time. 3CR to note there as well. I'm not sure whether I noted the H1 yet. We were making an H1 three candle reversal up, which again is good because if we'd made one in the previous hour, then it's highly likely that we could potentially be pulling back to test and then continue for the rest of the day up, as it were. So always worth looking at those things. 3CR up. We'd had a little pullback on the 30-minute, and if we look at the 15-minute, we can see that clearly what was going on. There's the pullback based on that what was a 30-minute and a 15-minute 3CR up. Clear divergence again there. Nice momentum change. We've gone from red to green. We were green when I considered entering. If you wait for it to close at these busy times, then you're likely to be potentially a little late to the trade, as it were. So that's worth mentioning. Watch that 5-minute. And then the 5-minute, we can clearly see we've got the 5-minute 3CR, which combines with the new momentum going on there as well. This was absolutely slam dunk. If you follow my Twitter closely, you'll realise that I hadn't intended to take this trade. I was going to go off for breakfast after having made a bunch of H4 daily and lower time frame uh, screenshots and charts for both this and cable, and deciding that short term at least it was definitely very, very bullish. So you know, if I see it there, then I'm going to trade it. And the target was just this area here, expecting possible. You know, I people often ask me, what's my reward risk? What do I trade? You know, and all that lot. I trade to the next level that I think price may have a problem at, and that's there, and that's precisely where I traded to. I expect it to go on, and because in look, there's next to no drawdown on these things, so we're entering when the algos have absolutely caned the sellers, faking them in, whatever you want to call it, and then taking stops out and so on and so forth. So, as I say, this is the exhaustion pattern. We are trading an exhaustion pattern. They push it up, then they try and build bigger positions. In my opinion, that's just my opinion. They're getting discounted orders by using their own money to force price down again. Then we get this burst up, and they do the same thing again, building discounted entry levels by pushing price down again, or you know, you could call it faking in the sellers, or whatever you want to call it. Sellers are thinking, oh, there was selling going on here, let's get in and sell. But you know, and selling going on here, so let's get in and sell. It doesn't always work that way. That's why I hate picking tops and bottoms without at least a trend in place. So that's it, guys. Thanks for watching, and I hope this has had some value for you. Don't forget, tell your friends, subscribe on YouTube, follow, and retweets. I love likes, guys, on Twitter, but retweets are spreading the word to other traders. Hopefully, thanks for watching. Have a great day. It's Monday, by the way, so have a great week.